All right, let's dive into something that is, no joke, one of the most critical parts of trading, but it's the part almost nobody talks about enough. We are talking about the art of the exit. Seriously, getting this right can completely transform your entire trading game.
We spend all this time, all this energy, obsessing over the perfect entry point. But this quote, this really hits the nail on the head. The exit is where the money is actually made or lost. That's the moment of truth that decides if a trade was a success.
I mean, come on, who hasn't been there? It's the absolute worst feeling. You're up, the trade is looking beautiful, and then you just sit there and watch all those paper profits completely evaporate and turn into a loss. A solid exit plan is your #1 defense against that feeling.
So, here's a good way to think about it. A good entry, that gets you in the game, but a good exit, that's what lets you win the game. And that's exactly why your exit plan, not your entry, is the real key to long-term consistent success.
When you really boil it all down, every single exit strategy comes down to this one fundamental choice. Are you the type of trader who wants to lock in a clearly defined profit and just move on to the next trade? Or are you trying to catch a massive, game-changing trend by letting your winner run as far as it can go? Let's break down both of those paths.
Okay, so let's explore that first path. This one is all about discipline. It's about taking emotion out of the equation by having clear, objective goals right from the get-go.
So, what is a fixed target exit? Well, it's pretty much what it sounds like. Before you even think about clicking that buy or sell button, you already know exactly where you're going to take your profit. The decision is made based on cold, hard analysis, not greed or fear, which is absolutely crucial when the pressure is on.
Now, there are a couple of really popular ways to set these targets. On one side, you've got the R multiple exit. This is totally systematic. If you risk, say, $100, that's your 1R, you might aim for a $200 profit or a 2R target. It's pure math. On the other hand, you have the technical level exit. This is more of an art, where you're reading the story of the chart and targeting those key zones, like old support or resistance, where you expect the market to turn around.
Okay, fixed targets are great for discipline. But what about those trades that just keep going? The ones that could really make your month, or even your year? Well, that brings us to our second path, trailing stops. This is the art of capturing those huge account-changing moves.
A trailing exit is so powerful because it's dynamic. As the trade moves in your favor, your stop loss literally trails behind it, moving up and locking in your profits. It's brilliant, really. It does two things at once. It protects the gains you've already made, but it also gives the trade enough breathing room to keep on running.
All right, let's actually visualize how this works with one of the most intuitive methods out there, the swing point trail. Just picture this. You're in a long trade, it's in an uptrend, and the price is moving nicely in your favor.
So how does this work? It's really simple, and it just follows the natural rhythm of the market. First, the price pushes up and makes a new high. Then it pulls back a bit, right? It forms a new higher low. That little pullback, that new low, is your signal. You just slide your stop loss up to right underneath it. As the trend keeps going, you just keep repeating that process, letting your stop chase the price all the way up.
Okay, so we've got fixed targets for discipline and we have trailing stops for those massive wins. The big question is, do we have to choose? Can we get the best of both worlds? And the answer is a huge yes. This brings us to the real aha moment of this whole thing, scaling out.
A super popular way to do this is something called the rule of thirds. It's so simple. You just split your position into 3 equal parts. You take profit on the first third at a 1R target. You take profit on the second third at 2R. And that last third, you'll let it run with a trailing stop. It's genius. You get the psychological win of banking profits, but you still have a piece of the trade in the game to catch a huge move. And this strategy leads to one of the most incredible feelings in trading, the risk-free trade. Once you've taken some profit off the table and moved your stop loss up to your entry price, you literally cannot lose money on that trade anymore. The psychological weight that lifts off your shoulders is massive. It lets you manage the rest of the position from a place of strength, not a place of fear.
So we've got the strategies, we have the tactics, but having a plan is one thing. Actually executing it when the market is flying around and your emotions are going crazy, that's a whole different ballgame. This is where we have to master the mental side.
And honestly, here's the bottom line. You can have the most brilliant, back-tested, perfect exit plan in the world, but it is completely worthless if you can't follow it when it counts. Mastering your own psychology isn't just part of the game, it's the final boss battle of trading.
We have to be honest with ourselves and recognize these common traps, because we all fall into them. Letting losers run, hoping they'll come back. cutting winners short because we're scared to give back profits, having no plan at all, and the biggest sin of them all, moving your stop loss further away to give a losing trade more room. But look, for every single one of these costly mistakes, there's a simple, disciplined solution.
So how do you actually get better? Here's a quick checklist. Backtest your ideas to build confidence. Keep a detailed journal, that's your report card. You have to adapt. A strategy for a trending market won't work when it's choppy. And maybe most important of all, you have to personalize these rules so they actually fit your personality and your risk tolerance.
So let's just leave it with this thought. Your entry, that's what finds the opportunity. It gets you in the door, it gives you a shot. But what's going to ultimately define your profit and your long-term success as a trader? It's all about your exit,